There are three reasons I sell a stock. The first reason is because my investment thesis turned out to be incorrect. The second reason is because another stock presents an opportunity surpassing that of the current holding. And the third reason is because an unacceptable amount of uncertainty is introduced into the future growth prospects. Well, the business I am discussing today met that third criterion, and the latest earnings affirmed my selling assertion. UnitedHealth Group just had an abysmal earnings report and single-handedly dragged the Dow Jones Industrial down along with it. Welcome to the Quality Investor. I sold out of my rather sizable position of UnitedHealth over the course of a couple weeks in late March and early April. I sold at a modest 10% gain and was waiting on their earnings to discuss my decision. But oh man, I did not expect the cratering of UNH that we witnessed after their earnings this past Thursday. A staggering 22% decline in a single day. According to this X account, it is the largest earnings gap down in UNH history. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. I consider myself lucky that I sold when I did. Of course, no one saw this earnings debacle coming. My reason for selling is what I alluded to in the intro. I sold because uncertainty about their future has reached unacceptable levels for my personal tolerance. This earnings report, while troubling, would not have triggered me to sell under normal circumstances. That's the key phrase, by the way, under normal circumstances. Under normal circumstances, I believe UnitedHealth is a strong business facing some short-term headwinds. But I believe the circumstances changed in early 2025 when UNH became the subject of yet another DOJ investigation, this time for Medicare fraud. So on today's video, I want to discuss why I sold, what the latest investigation is all about, and how this earnings report actually reaffirmed my decision to sell. The earnings report overall wasn't as bad as the market drop indicated, but it also signaled trouble ahead for the health insurer. Revenues rose nearly 10% to $109.6 billion. However, that was a miss from the expected $111.6 billion. Adjusted earnings also missed, coming in at $7.20 a share against expectations of $7.29. A miss on the top and bottom line isn't really cause for alarm though. What really triggered the sell-off was UNH revising down its earnings outlook over 11%. It had forecasted $29.50 to $30 earnings per share, but that is now $26 to $26.50 per share. That is a material downgrade, and the reason provided didn't reassure trepid UNH investors. CEO Andrew Whitty outright stated that Q1 performance was, quote, unusual and unacceptable. The miss in earnings was driven by the all-important medical cost ratio. That is, a calculation of premiums paid out of premiums collected. The lower the number, the better for UNH. That number rose to 84.8% this quarter compared to 84.3% a year ago. But it was a drop sequentially from last quarter when it was 85.5%. The issue, however, is this ratio has been trending upward for some time now. 3 years ago, it was at 82%, and 4 years ago, it was at 80.9%. This is putting downward pressure on overall margins. The company laid the blame for this increase on Medicare Advantage. Specifically, they said UNH experienced a doubling of care activity rates compared to what they planned for in 2025. Optum Health also saw unanticipated changes in member profiles. This resulted in 2025 government reimbursements that were not reflective of the actual health status, as well as plans leaving the market, and Whitty blamed Medicare funding reductions enacted under the previous administration. All of this underscores the rise in medical cost ratio. Basically, patients were seeking more care than they expected. These issues, however, are short-term in my view. The Medicare Advantage margins are expected to stabilize in 2026 back to historical ranges, according to Tim Knoll on the earnings call. But what worries me is the latest investigation and certain actions performed in Q1 to mitigate some of the performance issues UnitedHealth had. They are now under investigation for outright Medicare fraud. To be more specific, they allegedly overbilled Medicare Advantage, which reimburses health insurers, by inflating diagnoses. The DOJ is investigating if UNH manipulated patient diagnosis codes to make them appear sicker. This would lead to higher reimbursements from the government. There has been multiple allegations of this practice by UNH over the years. I have linked more accusations in the description. This was largely spurred on by Bill Ackman. Ackman accused UNH of overstating its profitability due to denial of medical procedures. The post was later deleted after challenge by UNH's legal team, but the cat was now out of the bag. He lent his support to Dr. Elizabeth Potter, a surgeon who claims UNH pulled her from surgery to justify a patient's care. I have linked to Ackman's tweet in the description. All of this highlighted a system rife with fraud and abuse, the murder of UnitedHealthcare CEO notwithstanding. The Medicare Advantage system itself is vulnerable to abuse because higher diagnoses yield more funds. The other troubling aspect is that the very solution UNH proposed to deal with increased Medicare Advantage usage by patients was to focus more on health risk coding, the very practice UNH is now under investigation for. I've linked to a tweet by Real Doc Speaks that details this. For me, UNH has become too uncertain as an investment to justify holding in my portfolio any longer. While the underlying fundamentals remain strong, this is contingent on the fact that they are not actually committing fraud. And with the investigations mounting, public backlash against the healthcare industry as a whole rising, and an administration not exactly friendly to the industry, there is too much uncertainty and unpredictability for my taste. So, I sold. It is very possible nothing will come of this, and UNH operates as business as usual, in which case I might miss some upside. But honestly, I used my proceeds to invest in Amazon, Google, and Microsoft, so I'm not worried. But let's take a look at their numbers and assess what a buy price would be if you were to add more UNH to your portfolio. UnitedHealth's massive fall Thursday after earnings, almost 24%. It looks like the cliffs of Dover. The 5-day chart here just humming along, no problem, and then falls off the cliff. The fall has made UnitedHealth down year to date almost 10%, and it's now down 8% on a 1-year basis. The market was clearly spooked by the downgrade in the outlook of 2025. But how bad were the actual earnings? Top line growth appears fairly in line with what UnitedHealth's done historically. $109.6 billion in revenue for Q1, which is a 9.8% increase over the $99.8 billion they did in Q1 of last year. And sequentially, they're up 8.7% from $100.8 billion in Q4 of December 2024. UNH does a very good job of just consistently growing revenue every single quarter. But like I mentioned, this is what's causing some concern. An 84.8% medical care ratio, up from 84.3 a year ago. And the increase was primarily due to revenue effects of both the ongoing Medicare funding reductions and member mix in the higher senior care activity, and they say it's partially offset by Medicare Part D program. But it's the higher senior care activity I was alluding to earlier when I was saying that patients were requesting more services. And if you listen to the earnings call, they specifically are requesting more specialist visits. That will result in higher reimbursements from UnitedHealth to pay for those visits. But there are some favorable things here. The first is the net margin is up slightly, 5.7% on a sequential basis from 5.5%. They had a pretty tough Q1 last year due to some one-time events like a cyber attack and the divestiture of the South American business. So you can't really compare to that 1.4% last year. but they did increase the net margin slightly. However, what is a little bit concerning is Optum. Optum has been a much higher growth engine for UNH as a whole than the health insurance business, UnitedHealthcare. But we see $63.9 billion in revenues, which is only a 4.6% increase over last year. Typically, this business is growing about 12 to 15% year over year, and it's actually down sequentially from $65.1 billion in Q4 of 2024, a 1.8% drop. And of course, it was in Optum Health where we saw the plans exiting the markets, which the company is saying led to low 2024 engagement and resulting in 2025 reimbursements below the expected health status. All in all, you get the feeling that UnitedHealth was blindsided by a lot of unforeseen challenges to the business in 2025 Q1. Here's that tweet I was talking about earlier from Real Doc Speaks. They link to an article here that describes the earnings call with UNH and the analyst. UnitedHealth had a dismal quarter as Medicare Advantage patients used more health services than expected. The solution that was proposed for this was very interesting. The solution is to focus more on health risk coding, which is the assignment of medical diagnoses to patients that result in higher payments under Medicare Advantage. UnitedHealth is the subject of a DOJ investigation for Medicare fraud for this very behavior. Both the Wall Street Journal and Stat News have run a series of articles documenting the aggressive use of home health visits, chart reviews, and the use of employed physicians to upcode patients. Billions have been paid for diagnoses that were never mentioned in the patient's medical record and never resulted in any care for the condition. UNH is doubling down on this behavior, and the real question is, will they be allowed to receive billions more from CMS for diagnoses not associated with any care? These phantom diagnoses payments are part of the reason that Medicare Advantage cost $83 billion more in 2024 than traditional Medicare. We can't afford to look the other way, and DOJ Crime Div needs to step up and stop any Medicare fraud that occurs. And this is part of the main reason why my decision to sell a couple weeks ago is reaffirmed during this earnings cycle. It appears that they're doubling down on this behavior. And whatever the result of the DOJ investigation, there's just too much uncertainty surrounding UnitedHealth right now for my comfort in investing in the business. Despite that, however, what do the numbers tell us? Let's say that nothing happens, nothing comes of any of this investigation for UnitedHealth. What do the numbers tell us is a good entry point for this business? First, I just want to point out what I was talking about earlier. You see that medical cost ratio, which has been trending upwards, has had a negative impact on the margins over the last couple of years. Since a high of 26.06% in 2020, it has since trended downward for gross margin. It now sits at 21.99%. Operating margin had a high of 8.77% in fiscal year 2022 and has been down ever since to 8.16%. That doesn't seem like much, but for a business the size of UnitedHealth, that is a difference in operating income of billions of dollars. The free cash flow margin has also been affected. Now, it was down quite a bit in fiscal year 24 due to some one-time events that I mentioned earlier in Q1 of 2024, but it is still below on a trailing 12 basis where it has been since reaching a high of fiscal year 2020 at 7.83%. These are the estimates I'm using for UnitedHealth for the revenue growth over the next 10 years. I'm being fairly conservative here. So on a top line basis, I have revenue segment growth in the employer and individual plan segment here, 2.79% per year on the bear case, 3.79% on the base, and 4.79% on the bull. Medicare, I have growth here of 3.98% on the bear, 5% on the base, and 6.17% on the bull case. Then there's a smaller part here, community and state, but for the insurance arm of UnitedHealth Group, UnitedHealthcare, I have a bear case revenue increase of 3.88% per year over the next 10 years, 4.95% on the base, and 6.03% on the bull. Optum Health, which grows far faster than UnitedHealthcare, I have a bear case here of 7.5% growth over the next 10 years, nearly 9% on the base case, and 10.5% growth on the bull case. And you can see the total revenue for the business, the increase over the next 10 years, fairly conservative given their 5-year CAGR here of 11%. I am projecting by year 10, the bear operating margin to be 6.5%. And this is me trying to account for any potential issues with the Medicare investigation. 8% on the base case and 8.5% on the bull case. Ultimately, this would lead to a free cash flow margin of 4.47% on the bear case by year 10, 5.9% on the base case, and 6.57% on the bull case. Right now, they have a trailing 12 free cash flow margin of 6.06%. So where does that land us for a good buy price? Well, their share price now is at $454.11. It gives us a PE ratio of 19, which is quite a bit below their 5 and 10-year average, and a forward PE of 18.5. On the bear case, I have a DCF at $432.47, base case at $619.32, and my bull case discounted cash flow price is at $755.90. The dividend discount model, I'm assuming 9% dividend growth on the bear case, 11% dividend growth on the base case, and 12% dividend growth on the bull case, gives us $448.68 on the bear case, $617.78 on the base, and $749.19 on the bull case. And I currently have an exit multiple at $566.75. I'm using comps of Elevance Health, Cigna, and Humana. And in all of these cases, there is upside to be had. 3.5% on the bear, 33.4% on the base, and 55.67% on the bull case. So with this massive drop that we saw Thursday, if you believe that UnitedHealth is in good shape, good, sound, fundamental shape, I think is presenting a very good buy opportunity if you have the risk profile for it. With no margin of safety, that's a buy price of $597.15. With a 20% margin of safety, it's $477.72. Given UnitedHealth's uncertainty going forward, I would probably prefer a 40 to 50% margin of safety before even considering buying back into this. And I would have to buy back in after all of this DOJ investigation stuff is cleared up, which means I'm not looking to buy in again until around $325. It still has quite a ways to go before that. The fundamentals for UnitedHealth look good. They're growing their customer base, but they just have some lingering issues that are making the business a little uncertain. So for that reason, I sold, and I don't plan on getting back in anytime soon. But if you have the risk tolerance for it, or if you believe that nothing will come of these various investigations, it might seem like now is a pretty good time to buy in to UnitedHealth Group.
Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.